We're watching markets this morning, and it is all about growth and the backdrop for the economy. On track to open up triple digits on the heels of Janet Yellen's comments last night. We're also awaiting, by the way, second quarter GDP number. This is the final number for the GDP for the second quarter. So it should be known and expected what we're going to see from the GDP, but that certainly will also add to all the moves this morning in markets. Scott Wren is with us right now, and he is the Wells Fargo Senior Global Equity Strategist joining the conversation. Good to see you, Scott.
Thanks, Maria. Great to be here.
Would you be buying into this market when it opens up 250 today?
What we want our clients to do is buy stocks. We want them to buy on the pullback. We're certainly still well off the highs. I think the fundamentals are still good, not great, but good. I think the worries about a fear of a slowdown in China are a little bit overdone. So what we want our clients to do is the same thing we've wanted them to do for the last 4 years, and that is step in, buy stocks. Retail investors, they're underinvested in stocks. They have too much cash.
You know, somebody said to me, I was talking to one of the heads of the trading desks, a major trading desk yesterday, and I said to him, well, maybe this is a positive and like maybe we're done with the sell-off. He said, no way. Expect volatility into year-end, into 2016 until we get the Fed out of the way completely.
Well, I think Janet Yellen's comments last night played into what the Fed governors, the 4 Fed governors, James Bullard from the St. Louis Fed being one of those, said. And after the market reaction on Thursday afternoon going into the close, the market reaction on Friday, I think the phones were ringing with inside the Fed, and they said, hey, we need to do something about this. And I think what happened over the weekend and what Janet Yellen did last night, they are paving the way for that December rate increase. We are going to hear these governors on board, same message. And so I think well before the December time, we're going to almost know for absolute certainty that December is when it starts.
Although, Maria, you say it's October.
I think it's October. I mean, this is just based on John Williams. We had John Williams, the president of the San Francisco Federal Reserve, on my Sunday program last Sunday. And I said to him, look, it's got to be December then because you don't have a press conference in October and you'll want the time to explain it. He said, we don't need a press conference. If we raise rates, we're going to take the time to explain it.
I think our debate here shows there's going to be more volatility. I don't think we've seen the worst of it. And you have to remember, we're up this morning, but we're still down in the year. So like Scott, we are buying selective sectors in the U.S. that have more domestic exposure, still love consumer discretionary. I think there's a lot to do in healthcare here in the pullback. I think the growth parts of tech look really interesting.
But you're both sort of talking about legging in, maybe buying in when the market comes down. Is that the way you see it? Scott's basically saying, look, leg in, buy on pullbacks. Is that, would you just want to buy today?
I think a phase-in strategy always makes sense, especially given the sort of environment that we live in where China's slowing, there's quantitative easing happening in Europe and Japan, there's a lot going on in the world, and valuations aren't what they used to be. So I think you have to be more thoughtful about how you time the market and how you leg in. But we wouldn't wait till December for the Fed to hike because that's going to be too late.
I got you. Dagen, you have to wonder if the slowdown, economically speaking, in China comes up between President Xi and President Obama today.
It has to. Well, and it already has. He's tried to soothe the business community here in the United States about the market volatility, about the stability of the Chinese economy. But I mean, we're all just he's really here to just put lipstick on it, on everything that China's doing, whether it's trying to steal companies' intellectual property as the cost of doing business in that country, their aggression in the South China Sea, basically China being behind cyber theft here in the United States and that giant hack on the federal government. It might look nice. They're going to make nice today, but we're not going to forget all the problems that China has, particularly with us.
It's true.
To Dagen's point about the cybersecurity, a lot of big corporations, your banks are probably among them. They literally have different cell phones and different laptops that business travelers have to take to China. You're not allowed to take your own.
That's right.
You have to take these separate machines that have been stripped, and because they know the Chinese are going to go in there,
right.
So they don't want to have anything that they can get.
It's funny that you bring this up. I was talking to Condoleezza Rice about this a couple of years ago, and she said to me, Maria, it's no surprise that every time I go to China, they put me in the same room in the same hotel. I mean, because they're bugging that room. And, I remember years ago hearing from Treasury officials where the Treasury Secretary staffers told me that they were not allowed to take their BlackBerry to Russia or China or other places because as soon as you enter their airspace, they have access to all your stuff.
It only makes sense. I mean, they have to be careful. This is going on. It's going to continue to go on. You just need to take all the precautions.
I just want to end on this one comment that you made, and that is is that, look, we're still down for the year.
Yeah.
So 2015 goes down as not great for equity investors. I mean, I know it's a year, and I'm a long-term thinker, but...
Yeah. Well, corporate profits have been sluggish this year. You had the dollar strengthen, you had oil prices collapse, you had the Fed on hold longer than a lot of people expected. So, I wouldn't become too negative just yet, because you look out into 2016, I think the economy is still in decent shape in the U.S., and that drag from a stronger U.S. dollar and that 60% decline we saw in the energy sector this year is not likely to be as bad next year. I actually think next year could be a better year for profits.
And I'd love to own a piece of an American corporation instead of lending money to the federal government at really stupid rates over 10 years. I mean, that's really the decision right now.
Yeah, it is. It is.
Earnings are going to be definitely. I mean, that when you take away that 60% decline in energy earnings, that alone, we'll see maybe 3% growth this year. Next year, you'll be back into that, I think that 6-7% range, something like that. The Fed will be much clearer. Maybe we see two, at least in our opinion, just 2 hikes next year, something like that. So I think the clarity will be there. You'll see better numbers out of China, or at least something that says, hey, things are stabilizing. Yeah. Better news out of Europe and Japan. So I think you can expect a good, not a great return. Between now and the end of 2016, I think you're going to see the S&P 500 making some new highs.
Making new highs, and you're the global equity strategist there at Wells Fargo. Give me the 3 countries that I need to be exposed to.
Well, I think, number one, you want to be exposed to U.S. large-cap stocks. Yeah. Then you want to look at these developed markets, Eurozone markets, Japan, multiple countries within the Eurozone. I think emerging markets will still be in third place if you're trying to rank those. But large-cap U.S. stocks, I think, are going to lead the charge.
I want to ask you later about your clientele and see if you're actually seeing that kind of mentality about international stories. Good to see you, Scott.
All right, great seeing you,
Thank you so much for joining us. Scott Wren from Wells Fargo there.